Alright, Pack, welcome back to another video here on the Dividend Doggo Show on YouTube, and I'm going to bring you in for the weekly portfolio review, and then we're going to go over net worth and the total cash on hand and stock portfolios, including 401k balances. And I did update just the Dividend Doggo portfolio and the IRA because there were purchases there. So we're going to go over that this week in the video. All in all, it's been a long week. I'm ready for the weekend here, and I hope that y'all enjoyed this video. So as you can see, we're still at about $202,000 in total gains. $57,000 of that is earned dividend income, and $144,000 is market gains. So let's go ahead and break down the week. You can see this is what it looks like all-time view currently. So there's been significant gains on several of the sectors. A couple of the sectors are in the red, but overall not by that much. So let's go ahead and break down the 1 week here, because by the week it was a rough week for the portfolio in the stock market. So as you can see, we're at negative $17,826 for the week. That's about 3% down for the week. So this presented itself as a buying opportunity to me. You'll see that I did a pretty hefty buy this week, and we'll check out what that is and where that is in the portfolio. So Coma money is down about almost 4% for the week. That is a pretty hefty amount considering this is just Berkshire Hathaway and SCHD. I'm just going to briefly go through all of these really quickly here so that we can get to the meat and potatoes of the buys and the net worth stuff. So Consumer Pie, the breakdown was pretty rough for the week, but not as bad as Coma money. Lowe's and Target were down pretty significantly, but everything else was about 2%. 1% for PepsiCo. So overall, pretty wild week for Lowe's. They got hit pretty hard. So I've got them still on the radar. I definitely want to make that position a little bit bigger. So we'll see how it goes going into 2023. Finance was down heavy over the week, about 5%, 10% for Bank of America, and 9% for Bank of OZK, 5% for Citigroup, 2% for JP Morgan, 5% for T. Rowe. I will be looking at finance pretty heavily if it continues to keep going down going into the next year for 2023. It is one of the larger sectors, but I'm definitely going to be reinvesting the dividends into specific ones in that pie. Healthcare was down one of the least. AbbVie down only 0.37, and then Johnson & Johnson down 1.75. So that brings us into the first buy for the week. Johnson & Johnson paid a dividend, and I went ahead and did a Johnson & Johnson buy, which I have not done in a while. I do want to get this position up a little bit stronger, and it's just one of those that I feel will compound throughout my life, and hopefully I'll get to pass down this portfolio at some point, and Johnson & Johnson can, pay for healthcare bills for someone else in the future. Utilities not down all that much for the week. Vistra was down 0.5. Duke was up 0.8. So not a huge change. I did have someone ask about Vistra in the comments. I explained that, I've trimmed the position significantly. I don't necessarily like the things that they're doing with the debt that they've taken on since Uri. They did, have that $1.8 billion payout over the year, so that was pretty brutal. All in all, I'm only looking to add to that position if it drops significantly. It is still very high in my opinion. Then BST was down about 3.6% for the week. All in all, about the same as the majority of the portfolio except for finance. And then the industrial slice here that we added, this was Louisiana Pacific Corp. This was up 1% for the week. I figured this might go down, but it's actually ended up for the week, so that's pretty fantastic. I am going to jump into the next buy. None of you should be shocked if you've seen this channel for any length of time. This is an IRA purchase. This was SCHD. Bought $6,000 this week in SCHD. The market was getting kind of beat up. I should have maybe waited till closer to the end of the week, but you can't really predict what's going to happen. But overall, I wanted to go ahead and get some more SCHD this week with everything kind of going down. They did announce that they're doing the dividend for SCHD, and I want to say it was like 60 something cents. Might be higher than that. I should probably double check that, but I'll get paid that and show you it when it comes into the portfolio in just a couple weeks, and show you exactly what each of the positions have. So this is an IRA purchase. This was not in the Doggo portfolio. So that's going to bring us into talking about the net worth and stocks update. I'm going to try to make sure that this is as visible as possible for you. And this is the total breakdown. So I went ahead and we went through like the IRAs last week, the 401k accounts, and I kind of showed them off a little slowly, but this is the third week going into this, so I'm just going to reveal the entire thing. This isn't super pretty. I'm not an Excel or a Google Sheets wizard. This is just kind of the breakdown and basics of what we have invested in the stock market or in cash right now. This is specifically money that is oriented to the stock portfolios and savings. This is not the real estate holdings or anything to do with the business. I'm not sure that I will go into that this year. That's something I might go into the future. But I do want to break down the last couple things here. So I did update the traditional the brokerage account for M1 Finance to update for the end of the week, and the IRA. This is about 75% SCHD and about 25% ABR at this point. Beginning of next year, I will get the opportunity to add another 6,000 to this. I didn't really start an IRA because we were focused so much on the real estate stuff that I didn't really worry about it too much. So at some point, when we initiate F.I.R.E, we're going to start rolling all of these funds over. Hopefully we can roll them over into Roth accounts to earn the SCHD income and then be able to withdraw that. And we're about 20 years out from traditional retirement. So that's quite a long time to let these accounts kind of build up and do their thing. But I want to build up a significant SCHD position so that we can take out every quarter just the dividend income from SCHD and ABR when we go into retirement. I'm likely going to change around some of the portfolio structures once my wife retires and we roll some of these accounts over. We will likely move those into either more dividend focused stocks, or we will get them in positions where we can trade options and take the premium out and leave the actual stock balance in. That's one thing that I've been thinking about with most of the money being in the S&P 500. So there are a lot of different choices and options to go with retirement planning. Our retirement plan is to build up the traditional brokerage account to the point where it will bridge at least probably a decade to 12 years so that we don't have to take out from 401k funds until sometime in our 60s. And we're planning on trying to retire at 50, which is still more than a decade away. That's quite a bit of time to continue building all of this stuff up, and I'm hoping that y'all are enjoying this journey and this glimpse into how we have our structure set up to basically we've got all these different buckets with money in it, and then we've got cash flowing real estate assets as well to try to make sure that we have multiple income streams in case something happens. We don't want to have to go back to work once we do F.I.R.E, so we're going to be trying to plan on getting a couple more of the properties paid off in the next decade or so that we can basically compound the cash flow that's coming in and not have mortgages on those properties and just be worried about, CapEx expenses, basically just worried about repairs, major things like that, like roofs, stuff like that, instead of having to worry about the mortgage directly. Just worry about taxes and kind of go from there. So hopefully we'll have, right now we're not cash flowing that much on the business side of things for the real estate assets because we took out the loans a couple years ago to help fund both these portfolios, and we've made real estate purchases in the past year. So hopefully we're going to build up another project here in the next 6 months to a year. And that'll be really interesting to see how that is going to generate cash flow, because that's going to bring down our big property purchase from 2021. So that'll bring down the taxable income significantly when we can start writing off a portion of that as well. So that's going to help generate more income to go into the portfolios for 2023, 2024, and going forward. So hopefully we can get all of that done over the next year. It's going to be pretty wild. I'm hoping that you kind of enjoy getting this glimpse into what the actual numbers look like. It's pretty staggering to me. This was actually about 1.8 million in 2021, but Tencent has come down significantly. As you can see, we hold about 159,000, about 160,000 in Tencent, and JD.com shares were given to us as a special spinoff, throw off of the shares that they had invested in it, so that they didn't have to pay taxes and stuff on it. They gave it to the shareholders, so we have just been holding on to that. We also have something else coming in the works. I believe Tencent is spinning off more shares of another company they invested in. So the beginning half of 2023 is going to be interesting to see. We'll probably get some more shares of another company. In China, I know that a lot of people have adverse feelings about investing in China. I do not. I think that investments are good depending on where you are at in life. You can diversify a pretty significant amount just by taking S&P 500. I don't want to just be invested in North America. I like the idea of having international exposure. However, I do want to transition that over to an index fund that invests in Europe as well as in China, and have that kind of separated out and diversify the funds. And I want to get it down to about 10% of the total portfolio that's invested in European and other foreign funds. So let me know what you think about that. If you think it's kind of crazy to have more than 10% of the portfolio invested outside of the US right now. I kind of like the idea of having about 10% or more out of the US stock market. So let me know what you think. I hope your week is fantastic. We're building up towards Christmas here really quickly. I hope that all of you have a fantastic weekend. Let me know if you have any questions, comments, or what your feelings are. But I do want to go over, because I know the numbers are really small, I couldn't figure out how to easily blow the pie chart up, but I'll go over really quickly. Cash on hand is about 1.8% of the total portfolio. The mix, which is the largest pie, is 41.4%. That is the M1 Finance brokerage account. I call it a mix because it's a bundle of stocks and SCHD. Tencent currently makes up about, and Tencent and JD make up about 11.7% of the total portfolio. The SCHD IRA is about 1.5%. The MFEGX, which is going to be liquidated this month, that's about 0.9. That money will be going straight into the Doggo portfolio in the very near future here. The total stock market and Disney, that makes up about 10% of the total portfolio. The F.I.R.E 500 is 27% of the total portfolio, and the S&P 500 is 4.8. However, the F.I.R.E 500 is basically the S&P 500. So when you combine that, about 32% of our funds total invested right now is in the S&P 500, and the total stock market fund also has a huge amount in the S&P 500 as well. So we are relatively close to about 36%, I believe, of our total investable assets are S&P 500 stocks. So let me know what you think there. Did you expect the number to be 1.3? I do expect it to be lower, higher. I appreciate every single one of you. The channel has grown a lot over the past 6 months or so, and I greatly appreciate all of you, all the new subscribers. If you have questions, I will try to respond to them down below. How we got here is the most common question I get asked. We save around 30% on average to 40% of our taxable gross income before taxes. We try to save that amount via 401k funds. We max that out the past few years, and we are trying to build up as much as possible. We like maxing out the 401k because we're in a high income tax bracket right now. Don't plan to be in that bracket for very much longer, maybe a few more years, and then we'll be transitioning stuff down and rolling things over into Roth accounts and stuff like that. So thank you very much for watching. Hope you all have a fantastic weekend. Dividend Doggo signing out.